Welcome to this lesson. In this very lesson, we are going to be looking at volume. As a technical analyst, you really need to understand the importance of volume in your analysis and even in your trading. It's going to help you know when to enter the market or when not to enter the market, especially if a market is not having volume. If a market is lacking in volume, you will know that you need to reconsider your entry. You need to reconsider entering that trade or waiting for volume to increase. Okay. So to start using the volume indicator, all you need to do is to click on indicators. Okay. You search for volume. Just type the word volume, and you are going to see a lot of volume indicators. But this is the very one we are using, this particular one. So just click on it, and you are going to have it in your chart. Then the volume indicator is what displays at the bottom. Okay, so it's represented by bars. The longer the bars or the larger the bars, the more volume it indicates. Okay, so volume is very, very important when you come to trading or your analysis, because it helps you know if there is more pressure coming or it's just a short-term something. Okay, so like here, you can see the volume here was very large. Okay, you can see this current volume here, this current volume bar, this red volume bar. Okay, you can see that volume bar is very large. Okay, that shows there was a volume. And look at the candle that owns this bar. Was this very small candle, this candle that the body was very tiny but the wick is so long. Okay, so that is the candle that owns this volume. So from here, what you can understand from this volume bar, what this volume bar can tell you, that look at from this angle. Okay, from this area, okay, you can see the volume was a bit high here, but reaching here, it started dropping. It started dropping and up to here. But from here, we started seeing a volume increase. The volume started increasing. Now, pay attention to this. Observe from this moment when the volume started increasing. Observe that we started seeing bigger candles. The market started pumping higher. It started going like there is more pressure. It became more active because there is more volume. So imagine here, look at this area now. Okay, look at this area. You can see that the price was not going that high, but if you look at the volume here, you can see that the volume is the volume indicator is simply telling us that there is no much volume here. So in such case, you avoid this kind of charts. You avoid taking your trade in this kind of condition, because you can see that there is no buying pressure, there is no selling pressure. So the market is just ranging small. Do you get? But observe what happened. See from here, from this very candle, this red candle here, this green candle here, we started seeing volume increase. So if you were, for instance, using this moving average as your support, as your dynamic support, which we've already studied. So let's say you were waiting for this, for the market to get to this moving average for you to take your position or for you to enter a trade. Okay, you can see that if you observe the volume around this area, you will notice that there is no much volume. So all you needed to have done is to wait for a volume increase. And from this moment we had a volume increase, okay, from this area where we have a volume increase, okay, this area here, from this candle, we had a volume increase from this candle. Okay, you can see from that moment, if you had entered the market using this moving average as your support or as your entry signal, based on you are using it as support and you want to enter on that support, okay, now you see that your trade could have become successful, because all through we saw a very massive volume increase. You can see that, and that would have given you a very clean trade. So if you look at it, you see that you could have been able to catch this wave, because you were able to understand that the volume started increasing. You could have been in this trade even before this highest point where the volume was massive. You could have already been in the trade because you understand the volume. So when there is no volume in the market tends to range more. And in a ranging market, it's difficult to understand the direction the market will take. So it's just like you are now waiting, or you are trying to bet on on a tiny air. So it's always better that when market is ranging, you wait till you see a clear move in the market, then you know what to do. So that is how you can use the volume indicator to know if there is volume in the market or not. So from today, if you keep hearing people or you yourself, you are saying there is no volume in the market, I believe you will understand what you are saying or what someone is telling you. So when there is no volume in the market, you can always see the sign using the volume indicator. Okay? So that is it. And like take your time more, study this more, practice more. The more you do that, the more you start understanding how the volume behaves. You get? So this is just a basic volume indicator that lets you know or gives you information about if the volume is increasing or not. Just like here, from this area, we can see that the volume was decreasing. You can see it was just decreasing from that point. Okay, so you don't want to enter a trade when the volume is decreasing unless you are doing spot trading. If you are doing spot trading, then your entries is always when the market is dumping. Do you get? When the market have settled and you can see the price and all that, that is spot trading, because you are trying to buy cheap to sell costly. You get? But a future trader, you should be more interested in entering the market when there is higher volume. So like here, okay, like this area now, if you are trying to use this trend line, if you are trying to use this moving average as your entry, you can see that since you notice that the volume is decreasing, all you needed to do is to wait for volume increase, which happened around this area. We noticed that volume increase, which went all the way here. So that could have given you a clean trade instead of struggling, because if you had entered here, you could have struggled all this time. And imagine if during the period, if the market changed direction, because there was no volume to push it forward. So that is exactly how volume works. Congratulations, you've really come a long way, and I'm very proud of you.